Today we would like to discuss crypto assets and cross-border payments. And for this reason, we invited two experts in their field. One from the European Commission, which I think is quite known at the EU level. Ceyssens, who's the head of unit at DG FISMA for digital finance, and one of the key actors in designing the lately published markets in crypto assets regulation, and also participating in the whole digital finance initiative, obviously. And the other gentleman joining us today is Treacher, who's a senior vice president from Ripple and responsible for the EU business or the European business at Ripple. Thank you both for being here today. We really appreciate that. Maybe before we start the actual discussion, a very quick outline on how we want to structure this debate today. So we have roughly an hour. So the idea is to have Jan give you a quick intro in what's happening at the European level. So like elevator pitch about the digital finance package. Will be a bit longer, I think, but still. Then we will have and hopefully very nice and fruitful discussion. And then we will launch in parallel a number of polls, which we then want to answer you, so the audience basically, and then we would like to give the panelists the opportunity to comment on those. It's a rather high-level questions about some of the latest developments and in the regulatory field, but also beyond that. And then we would like to open the floor to the audience for like 10-15 minutes, so that they can ask questions to the panelists. I hope that sets the scene. So the floor is yours, Jan. We're looking forward to your elevator pitch. So please take your time. Thank you.
Yeah, thank you, Robert. Thanks very much for setting this up. Now, you know, here in our office buildings, I mean, we are actually strongly discouraged to use the elevators. So I think we are encouraged to use the stairs. So that gives me hopefully a bit more time to set out what we have. But I will still be brief.
Sets the scene.
So indeed, as I think you probably know, let's say Europe and the EU, we are hoping very much, we're banking very much on the fact that let's say the recovery of the economic recovery in Europe with COVID, amidst COVID, basically, that this is an opportunity actually to also to accelerate the digital transformation. And I think in finance, it has been particularly obvious that basically all our citizens are ready for digital finance, and it's something which helps them, and they have got used to it. And so we now really need to actually also benefit from this to fast forward a bit the European financial sector into the digital age, where this has not yet arrived. And also to play, I think, a leading role in that. So with this in mind, actually, the European Commission has presented 2 weeks ago a digital finance strategy, actually, to set out how we, from the European side, from the public sector, from the European side, we want to actually encourage and promote this digital transformation of the financial sector. Because we think that digital is really the future of finance, and because we want European companies to be really at the forefront of this development, and be key players in it. Because we think that actually in some areas like payments, we have a lot to build on. I think the internal market and our also the cooperation on the one hand between the regulatory side, between the central banks, and between, let's say, the private sector has been actually quite successful in creating very modern and efficient systems, and that's something on which we can build. So I think we're also very much aware, of course, that Europe as such is a big opportunity for digital and for digital finance, because many of the digital solutions are way too, or put it like the other way around, maybe many of our member states are far too small actually for digital solutions and digital finance to work in a proper and profitable way. So the single market with 27 member states is really the cornerstone for many of the digital companies in Europe actually to develop their operations. And in that sense, basically, I think the first big the first big focus we want to have is indeed making sure that this European digital single market works in all areas. that as a company, basically, if you register in one member state, you can passport your activities in all areas to other member states. That as a consumer, actually, if you want to have do across a payment, an instant payment, you can do that in your member state, but also across borders. And that as a foreign investor or a foreign company, if you want to come and make business in Europe, actually, you have one set of rules and one kind of supervisory system to look at rather than 27. Last but not least, that the supervisors actually look at the new risks which are also arising in this area together, and that they build the digital capacities they need actually together rather than trying to do this 27 times. So I think that's why this European perspective is really important for us. And that's, I think, also really something which was broadly confirmed when we had outreach activities earlier this year in many member states and across other jurisdictions. So I think hand in hand with that goes that, let's say, the single market has a single rule book as a framework. So we have common rules, which are the flip side in a way of the possibility to passport your services from one member state to the other. And those common rules, of course, need to be fit for purpose and adapted. I mean, both technology neutral, but also adapted to innovation and the digital age. So that's, I think, the second big area we want to look at. And indeed, I think in that context, let's say, in the context of those both priorities, I think you can see very much the specific proposals we made to establish a European crypto assets framework. We call this shortly MiCA, Markets in Crypto Assets. I think we don't forget beyond with that, we don't forget that digital finance also has risks. So we also have presented a proposal on digital operational resilience, DORA, in Europe, to have, again, there a common set of rules, a common framework for companies operating across the financial sector and across the 27 member states. And importantly, we know that let's say digital finance will be data driven, and so our fourth and last priority is indeed to develop a European financial data space, to build on what we already have in place in terms of data disclosure, in terms of actually PSD2 data sharing obligations, and to basically to really make sure that we have a framework that actually is conducive to data-driven innovation and data sharing. So I think those is overall, in a nutshell, basically the issues we're looking at. As I already mentioned, I think crypto assets are really a strategic topic for many of those things, both because we do not have today actually a common single, let's say, rule book of that. So, and we do not, in that sense, have, let's say, the possibility to passport, so to open shop in one member state and then to be able to operate across all 27 of them. So with actually the new MiCA regulation, we are establishing a set of rules which I think we are quite proportionate. Less, let's say, intrusive for smaller projects, more intrusive, more strict indeed when it comes to significant stablecoins, for example. We also established a common supervisory system there, and that relies for smaller, actually for smaller projects, indeed very much on this principle of home supervision. So you register with one member state and you can passport in all member states. But for the largest operations, again, for significant stable coins, indeed, then to have, on the other hand, a supervision by the European Banking Authority, because those kind of arrangements would really probably likely work across all member states and be relevant for all of them. Let's say last but not least, we are covering all the different operators in the ecosystem. We're covering issuers of crypto assets. We're covering the different service providers, and in that sense also establish a system which should then, let's say, together with the AML rules which are still in place and which will also be further harmonized, really provide a comprehensive rule book on which can then also replace the different laws which are today in place in different member states. So this is in a nutshell basically the idea of MiCA. Both promoting the internal market, making our legal rules innovation friendly, and making sure that risks are addressed. And we do very much think that this regulation is also in this area actually will promote innovation, because many people are really looking for legal clarity and legal certainty to be able to scale up actually operations. We do know that in certain areas, actually, our legal framework already applies, and that's why MiCA doesn't come alone, but it comes with a sister, the DLT pilot. So for those crypto assets which are already covered actually by existing rules, I mean, roughly looking at the area of STOs, security token offerings or others. Actually, we have heard that possibly our rules can be a barrier to innovation. So we are allowing in a certain, let's say, subject to certain limits in a certain supervised space, we are allowing for the possibility, actually, if certain of our rules prove to be incompatible with DLT projects, to basically actually have narrow and clearly framed derogations from them, and to see whether really here the problem is the regulatory system or whether there are others, so that we can then also learn and adapt our system from that. So, I mean, we have here, what we're proposing is both MiCA as a new framework for those assets which are not covered by existing rules, and then indeed some flexibility for crypto assets more on the security side, which are actually covered by the existing rules. And we hope very much with this together that we can have a framework which indeed is both innovation friendly and also sufficiently clear and safe that both retail and also institutional investors will indeed expand their activities in this area in Europe.
Thanks, Jan, for this elaborate explanation. I think that's a perfect tone setter. Marcus, as the topic today is crypto assets, the future of cross-border payments, and knowing that Ripple is at the forefront of this issue, what's your view on how we can use crypto assets today in the current environment, what they can provide to the system, what innovation do they bring, how do they deal with existing regulation, and how do you see this playing out in the future? You're on mute, sorry.
Yeah, that's really, I thought that was clear. I think the big shift is in moving from a, am I muted still? Can you hear me okay? Yeah. I think the big shift is moving from a, a messaging-based batch constrained, high value, relatively low volume model that's quite varied among the countries in Europe and also countries worldwide, to one where value is exchanged and held 24/7 immediately without recourse and with legal finality. And that really shifts the kind of paradigm of how people pay each other, how companies pay, how companies receive funding, and also the kind of innovation that can be created in the digital world, because the underlying exchange of value is much more immediate and also much more reliable and 24/7 available. I think that kind of shift creates a wonderful foundation upon which some really exciting innovations can be brought to life for the industry. So, looking at the kind of cross-border world, there are many jurisdictions doing very similar things to the European Union, and I think the work we're doing in Europe, clearly the scale is very, very impressive. Very similar to moves in the US with the OCC, for example, but also many countries in the emerging markets are very quickly thinking through and developing frameworks for CBDCs or stable coins to be used domestically. And that creates kind of a sea change in how you can think about moving value between countries. In the old model, the only way to move value was to message between a bank in one country, a bank in another country. The Romans used a method that we use today. We just automate it. It's computerized, but it's a really old method. So the opportunity here is to switch from the messaging method to a completely connected ledger synchronization between a balance, let's say the UK, and a balance in the Eurozone. So at Ripple, what we are doing is focusing on building out that DLT international network. And we do this by two things. One, we interconnect with the ledgers of banks and payment companies in national clearing networks. And in that context, as the European Union gets behind and supports the growth of CBDCs and domestic digital assets, then the ledgers that Ripple is connecting to, let's say for example, from a Canadian repository to, let's say, a French repository, if both of those accounts or wallets or run are supported by digital assets, then the value exchange can be immediate, atomic, and have blockchain integrity, even though both ends of the payment exist in very different blockchain environments, one in my example in Canada, one in the European Union. So we're working on the interconnection. We call the model interledger, interconnecting between digital asset blockchains. Now that, if you like, addresses the need for cross-border payments to flow with the same velocity and the same scale that domestic payments can flow. So you kind of solve half the problem. The second half of the problem is all around liquidity. And the kind of elephant in the room is today, the world locks up around, I think it's around 10 or 10 to 15, whatever, $1 trillion at any one time in balances and nostros in different parts of the world to fund payments, which are, sent in great big chunks at end of day or end of week. The opportunity here with CBDCs running domestically and with a bridge asset, another cryptocurrency model, a bridge asset to connect those CBDCs together, the opportunity is to deliver liquidity on point in the moment, in microseconds, from one part of the world to another. And the model that we focus on is using XRP, which is a very high velocity and very high volume digital asset. It's a free floating asset, unlike a CBDC or stablecoin. Use it as a bridge currency between these CBDCs. So you imagine a world in future where there are, let's say, 180 individual CBDCs per jurisdiction in the world. Making markets between those CBDCs is quite challenging unless you have a common single point, the bridge currency, which then enables connections to be made more efficiently and markets to be made between these individual currencies. So you put that together with both a bridge currency between those CBDCs and the overriding ledger connection between the blockchains that run those CBDCs, and you are kind of redefining how value is moved cross-border. It's a complete departure from the messaging model that we've automated but haven't changed. And it moves into an immediate liquidity, a non-trap cash, a wallet-to-wallet, a micro-payment model. That's also really important for extending reach. European Union being a very strong, developed economic bloc, it's in a great position to then help leverage and grow inclusion around the wider region across Eurasia, Sub-Saharan Africa, Middle East, South Asia, Southeast Asia, and by leveraging what you're doing in the European Union and with the directive that you've currently kind of propagated, leveraging that to benefit those who need very high volume, very immediate, low value micropayments with very limited liquidity tie-up. It's a massive opportunity I think we can grasp by tackling that cross-border problem.
Thanks for this intro, Marcus. Jan, do you want to comment on that? So I'm basically just here to, coordinate a bit, but ideally, if you want to comment, then please feel free to. You're on mute.
Yeah, thanks. No, I mean, not much to add. I mean, I think I would point out that I think indeed, I think Marcus described some of the opportunities. I think from our side, we will also, I mean, we do see these opportunities and this potential. And I think probably we would also make the point, however, that the existing payment system, at least within the EU for cross-border payments, are already relatively high, well developed, much better than for cross-border payments elsewhere. So, I mean, we will certainly have to see, at least for the short to midterm future, and even beyond that, I would not yet write off completely traditional payments methods if they are further modernized. But I mean, it's in the end not for us to decide what will be the right, let's say, the right way forward here. I mean, that's in the end for businesses. So I think we are providing from our side the regulatory framework for different solutions to work, and then we will have to see how it goes. I think indeed you mentioned also, of course, the CBDC on which the ECB is working. We are certainly closely coordinating our works. Indeed, we are working on our side on the regulatory framework. The ECB is, of course, working on the euro, including the digital one, and so that's certainly also going to be an area where we can expect some further developments.
Yeah,
I think you're ready. Sorry, go ahead.
Yes, to kind of comment on that, I guess the elephant in the room is that the world is moving very quickly away from the money exchange model that we knew and loved and grew up with in the 70s, in my case, 70s, 80s, or 90s. And we're moving to a world now where value will be required to be exchanged between people in a country or cross-border, literally in the moment. And that value will be moving in cents, in tiny, tiny amounts, very high velocity, very similar to how the internet completely redefined how information is moving. So this Zoom call here would be impossible before the internet was created, that breakthrough was created. So I do think, although it's possible to rev up existing models to get them to run a little bit faster, to properly keep pace with where innovation is going across the wider industry and wider society, and the kind of firepower that's required within the financial system to support that, you've really got to have a very different way of looking at how value is exchanged. And I take your point, very, very good point you make, that within the European Union, within the SEPA zone, there is tremendous efficiency. And certainly our perspective at Ripple, we are a private company. As you say, we are engineers, we're getting our hands dirty, we're doing this stuff. We're not a bunch of consultants, which is, I guess, really important. We regard the SEPA zone as a domestic block. So when we talk cross-border, we're talking SEPA zone out. So we've already ticked the box that this is where it should be. It's in a good place. And I think we'll only get even stronger as DLT really comes online. You structure that environment. And in my view, the CBDCs in the Eurozone really kind of kick into gear. I think the opportunity is to do a similar innovation overhaul with the cross-border element. And that's where Europe can lead. If you look at what's happening in China and the USA, both of these, humongous economies are driving a transformation into digital and into new methods of value exchange. And I think Europe, as the kind of like that third tier, can then facilitate an outreach into the emerging markets and really, help the between 1 and 2 billion people in the world, which are underbanked and underserved by the the existing system.
And what also from our side, of course, I think, we fully see also, we have to probably look at different types of payments and areas of, there are some areas where indeed blockchain-based solutions can, would very clearly have added value even within Europe. If you think about the Internet of Things and the interaction and many, many other matters, on other areas, I think the competition will be much harder. And people, the retail shop around the corner, or the supermarket, it will take a bit longer to convince them that crypto is better than the card or the Apple Pay system which they're using today. So, but I think it's all to be seen and to be developed. And I think from our side, we really want to provide the framework for this innovation to happen. And then it's not up to us to decide what. It's for the customers and the end and the businesses to decide what's the best solution.
That's fair. I agree.
I think that was a good segue actually to two things. First of all, as I mentioned earlier, we want to launch our polls now. So please don't stop listening in, but please also have a look at those high-level questions, because we would like to then ask our panelists to comment on them, because I think some of them are going to the heart of what they're doing, and I think would be interesting. But basically, as we're talking about, the framework that the Commission is publishing, has published, I think there's some overall, I think is representing the industry here, and I think Ripple will probably confirm that. It's a very positive and very constructive piece of law or regulation. There's still some small details that I think we would like to get your input on, and how this would be solved. How was your thinking behind that? And maybe to start with, there's some criteria, for example. I mean, this is a very tiny detail maybe, but there's a bit which, once we've read this through, there's a bit for stablecoins criteria that's called interconnectedness with the financial system. And, this leaves a lot of room for interpretation, to categorize stablecoins, or as they're called in the proposal, asset reference tokens, into the category of significant asset reference tokens. How did you come up with this? How will this be described? Who's responsible for that? Maybe just to give an idea on how this criteria then will be applied and who will do that. That would be, I think, interesting to the industry. It's a very specific point.
Yeah, no, thanks, but it's an important one. I mean, I think drawing the lines is one of the most difficult businesses in this area. I mean, and that's, let's say, where indeed I think the questions and discussions around taxonomies of crypto assets are, I think, an important one in this area. I think from our side, we try to, let's say, draw the lines only when we really need to, because the different rules should apply to one box or the other box, basically. For the rest, I think it's for us, for the market to decide, let's say, how different categories and of products develop. But indeed, the question whether something becomes a significant asset reference token and then therefore enhanced requirements would apply, but also you would have European supervision is an important one. I should say it can have pros and cons. So, I mean, I would not necessarily think that you may, as a business, you may not necessarily want to be on one or the other side of the line. Of course, it also comes, if you are on the significance category, it comes with being subject to a European supervisor. At least that's our proposal. And you may want that, actually. I think overall, for example, quite a number of banks are quite happy for being supervised by the ECB. And in that sense, we have also, for example, provide for the possibility to actually voluntarily or to apply actually for this for companies to actually apply and kind of voluntarily be part of that category. But if you ask now from the supervisory perspective, how should this line be drawn? I think we have largely built there indeed on the work of the Financial Stability Board, which I think has identified quite a number of criteria indeed to identify global stablecoin arrangements. So I think we tried as much as we can. We are a fan of international cooperation, and we try as much as we can to build on that. And indeed, I think the interconnectedness is, let's say, for those like me who are coming more from the financial services regulation perspective, it is a well-known criteria. That's how we are identifying the banks which have to hold bigger capital buffers than others. So it is in itself not something new. The devil is there very much in the detail, and I think there we would rely very much on the supervisors also then to determine this. I don't think that the legislator or we should basically fix this now, because if we fix it now, basically it will be there for the next 5 years or longer, and the market will completely develop. So I think there we need to, the legislators should set out some general principles, and then the supervisors should basically let's say fill them. But I mean, if you want to have legal certainty, you can always apply to be in the category. So then you know where you are. So that possibility is always there.
Thanks, Jan. And then maybe as a follow-up question, and I think that's also interesting for Marcus to discuss, is the question of the implementation dates, because you chose 2 different types of implementation dates. So for as far as I remember correctly, for example, asset reference tokens, this will enter directly into force once the proposal is adopted by the co-legislators. But for others, like the crypto assets or crypto asset providers, the rules will apply 18 months after that. Can you maybe walk us through the thinking there, and then on what basis you decided to choose those timelines? Is there a reason?
Yeah, so I mean, I think okay, why do we need implementation periods? Of course, we all would like, if we think something is good, then we would like to have it in place as quickly as possible. Now, the thing is that, I mean, we are talking here largely about a space which is not subject to regulation and supervision. Some bits of it are, but others are not And so one needs to have a bit of time. First of all, once legislation is in place, the supervisors need to develop the implementing rules. For example, on the question we just decided, what is interconnectedness and what is not. Then the supervisors need to also get ready. They need to have organize themselves. They need to have the staff ready and everything. That's why you need normally implementation periods. Now, in the specific category of e-money tokens, and I think that's where we suggest actually a direct application of the rules. I mean, the approach is building a lot on the existing e-money directive. So in that sense, it is not something where, I mean, the supervisors, there are existing supervisors, there are existing rules in certain parts which we cross-refer. So that's why we think that there we can actually indeed go a bit faster. And I think that is also indeed, I mean, let's say in that sense, we're really trying to see where can we actually, I mean, how fast can we go, how long, we don't wait longer than necessary. So that's, I think, a bit the approach. And I think overall, however, we'll have to see, I mean, of course, the main factor for the application date will be how long will it take the European Parliament and the Council to agree on the rules. So, I mean, I would anyway say that all these dates are still, I mean, subject to, I mean, we'll have to see how the process now develops. I have confidence that I think we have signals from both sides of the co-legislator that they are very keen to move this file quickly. But of course, there are also difficult questions, and we need to get it right as well. So I think we also need to take the time it requires us.
And Marcus, hearing that from the Commission and knowing the process on the European level, and I think we're talking about something entering into force between 2022 and 2023. Is this something that is a positive signal to the industry? How do you see this compared to other jurisdictions globally in the speed of movement on the regulatory side? Is this something where Europe is on the faster side? Is this something that's basically what everybody expects globally, the time for this getting serious? Or is this something where we actually should make sure that this goes faster?
Well, in my mind, I think it really should go faster. I think the risk for Europe is to fall behind some of the other major blocks worldwide, which are really moving very, very quickly into this space. So the Chinese, for example, are launching a CBDC, I think in line with the next Olympic Games. So they've done the groundwork, they've done their the sandbox work, they've done their frameworking, they have a working structure. They're now piloting and working through a real tangible crypto asset for the national currency. So these things take a while to get moving, and I think as regulators and also participants get deeper into this technology, they find new things. You look at the airline industry, the way the industry works today is not how it was envisioned when aircraft were first moved into commercial use. Things change as you get deeper into a new way of working. So I think the risk in being over cautious is that the European Union could get into real active mode later than it would otherwise expect to be. So you end up being behind the curve. If that happens, going to the point about the international element, the cross-border element, I think that'll kick in very quickly, certainly between China, US, and other emerging markets moving into the digital model or the DLT model. The danger is that Europe ends up kind of trying to figure out how it fits into somebody else's model, because you're a little bit behind defining your model. So the only thing I would say, I would urge the Commission to keep a good healthy awareness that the world is moving very quickly. It's an interconnected world, and with trade being much more interconnected now than ever was beforehand, the risk of being a little bit late to the game is much more significant than it was maybe 20 years ago. I mean, for example, the largest population in the world in mid-century will be in Nigeria. It won't be in Europe. So there are parts of the world which are very rapidly transitioning from being emerging to very, very emerged powerhouses economically. And they will most likely adopt in rapid time new techniques, new models, new DLT solutions. It's important that Europe really gets out there, drives, and uses that advantage to bring its tech know-how to bear early in this transition, and isn't kind of overcautious and ends up kind of squandering the brilliance of European minds by being late to the game.
Jan, any comments?
Yeah, no, I fully agree with that this sector is moving fast and that we need to be fast. I think that we are actually in a pretty good shape on that in Europe. I would want to highlight that we are not. It's not that we now, let's say, we haven't started thinking of this now, and we have laws in place in several member states. Not that business cannot operate in Europe right now. Actually, also important clarification we provided is that already now in the proposals, if your stuff is like a financial instrument or like e-money, it looks like e-money or like that, and it is on a DLT, then it will remain in the framework which we have already today for financial instrument or others. So actually, in a way, this fundamental approach, I think, is supported by everybody, by the Parliament, by the Council. So already today, I think our proposal provides the certainty for everybody who is operating in what is currently financial regulated space, that they will be able to continue to operate there. We have, as for the service providers, we have quite a number of member states who have already laws in place. And in that sense, I do think that let's say, Europe is very much open for business and very much active on this right now. I think our proposals would, let's say, bring this into the next stage, because really you would have an interlinked system, and you wouldn't look at it in the national level anymore. And that is really something I think where we will be. Once it's implemented, we will be quite far ahead of others, because to my knowledge, even in the US, from one state to the other, let's say, the legal treatment is quite different, and I don't have no knowledge that there's any attempt to basically change this, because it's not going to be possible in the US. So, honestly, when it comes to cross-border and when it comes even to a federal state, I think the proposal we made today, also in 3 years' time, if only adopted then, will still be, I think, still be sufficiently ahead. So I full agreement on the challenge. I think I would be a bit more positive on when we look at how where does Europe stand on this.
Understand. I'm just being enthusiastic, and I'm very grateful for the pace you're running at. Yeah, even if you were doing it tomorrow, I'd always ask for quicker. So I'm very grateful.
Thanks. Another topic that is very dear to the heart of everyone in the Commission is sustainable finance. And I wanted to ask Marcus, how do you see crypto assets providing solutions to have a more sustainable financial system? Is there any way that this could support that? For example, the initiatives of the Commission on Green Finance, or becoming more sustainable as an economy. Is this something that you see any opportunities?
Yeah, look, massively. And again, to my point earlier about this being a whole new paradigm with so much more potential than you had with the messaging model we had in the past. A blockchain configurated payment system is much easier to plug into AI, plug into decision making, smart contract technology, which then gives you the ability to do great things like really stamp out money laundering, really stamp out terrorist financing, really stamp out corruption in the financial system. Also to overlay payments of all sizes with all levels of activity to valuable goals like ecology, maintenance for let's say social inclusion, financial inclusion. So it's possible to build intelligence into the payment networks in a way that we can't do today. So to my mind, if you look at your smartphones, people, I've got one here. We all have, it's full of apps. The apps do loads of great things. Those apps, if you ask somebody in 1999, what could the internet do? Nobody would think of those apps. Nobody would say, there's a thing called WhatsApp you can develop. There's a Strava when you go running, or there's a Fitbit you can develop. Wasn't even in the lexicon. So I think in a similar way, the redefining that's happening with blockchain regulation, with CBDCs, with a rethink of cross-border payments around blockchain and crypto assets, I think it will unlock a similar degree of innovation that we can't even envisage today, which I think will have a massive impact on improving the quality and the effectiveness of cross-border networks and domestic networks. And potentially, you can get right to the heart of the challenges in the system today. For example, banks are connecting to ever smaller ranges of counterparties to manage their risk and to manage the exposure they have through through inappropriate handling of payments. So that's creating a world which is less connected than really it should be. So whereas information is going one way, the banking system is going to go the other way. It's moving away from global connectivity. And I think that a blockchain model could completely revolutionize that, which would be really good for inclusion, for commercial flows, for integration, better coordination between countries, real power for good. That's not possible with the tech that we have today.
Do you want to comment, Jan, on that? Otherwise, I have a very nice question for you.
Then go ahead, and I can comment afterwards.
I mean, as you know, it's one of the key words that is floating around right now around the EU bubble is European sovereignty, and European sovereignty also applies obviously to payments. Mm-hmm. And there's a huge discussion in the financial bubble at the EU level right now about this. How do you see the Commission being able to achieve a balance between this ask for European sovereignty, for example, in the payment space, with the global nature of crypto assets? I mean, Marcus was speaking a lot of connecting the global economy to each other much more than it's even now already, and isn't it somehow difficult? I mean, how would you like to, or how could you achieve that, or do you think it's impossible?
Well, my personal view is we live in a global village right now, and that's not going to change. So we could either batten the hatches and stay in our garden and create our models there, or we could reach out to that village and lead. And I think the European genius for creativity and for scientific advancement, we're so well positioned to lead global thinking and lead where other countries are looking to probe into this new model. I think the answer is really to have our cake and eat it, to embrace, engage globally with appropriate thought leadership. We can drive a really strong digital base for payments across the Eurozone, including the good UK, which is clearly part of the equation, as it always will be. And in doing so, if we move quickly enough, we can define how that model could work for the good of global communities in future. And I think the European framework of cooperation, of openness, the rule of law, rule of democracy, is such a powerful model within which to innovate something and crystallize that into regulation for all. It would almost be a loss to the world economy and to society if Europe does not take that lead, and if that lead is given over to other economies that are driven by maybe less open government and less open ways of thinking about the world.
I think Marcus had his comment to your answer, so maybe.
Sorry.
No. I mean, this is it's better like this, because I think he knows it from the business perspective what counts. Yes, indeed. I think that is a question which is pertinent and which goes also way beyond indeed finance. I think the European Council, they had the state and government just discussed it actually last week. And I think, I mean, from that discussion, you can see actually where this is going. I think the buzzword which the leaders actually coined is the open strategic autonomy, basically. So, I mean, we cannot, I think that is maybe something where Europe in the past had a bit of a different approach. I mean, we cannot just create a marketplace and completely turn our blind eyes to who is working on this marketplace and where the money is going. and let's say which maybe potentially not democratic societies are benefiting from it. So that is no more possible. I think that's kind of a recognition which you also have in other countries. I think in the US, probably the debate has been, sometimes even much more brutal on this, kind of looking at TikTok or other kind of ideas. So I think we need to find a balance here. At the same time, exactly as Marco said, digital and digital finance, will not. You cannot develop this without being kind of open. And I think for me, the best way, especially in finance, the only way really actually to keep this strategic autonomy is actually to be good to support companies in growing. And we will not we will not succeed to have leading European companies if they're not subject to contested markets, if they're not basically don't have access to the best talent, and the best talent normally doesn't come to closed societies, but it comes normally to open societies. So in the end, I think what our approach here is actually in digital finance in general, and also with regard to payments, is in the first instance to create a framework where European companies can actually can thrive and benefit. And I think probably yes, we have seen too many cases where talent has been leaving Europe actually in the past, digital talent, and I think that's something we need to reverse. And the only way to do this is to create actually a vibrant and open background. I think in the specific area of payments, of course, let's say, that is also a strategic area. It is a part of the financial sector, but of course also something where society can also be vulnerable. So it is in that sense, it's an area where we are particularly happy that there are now also, let's say, European initiatives, because I think European companies in some areas have actually withdrawn, have been very weak. So I think we are quite happy that there are some initiatives of European banks or other fintech operators actually to push this again and to create additional, let's say, companies in the marketplace. And I think, as always in competition, I think the more competitors there are, the better it is, and the more diverse they are in terms of their business model and background, I think the better it is. And and in that sense, I think we hope very much that with the framework we are suggesting, with the strategy, we both create this kind of an open and attractive environment, and at the same time encourage also European companies actually to stay here and grow their businesses here and become global players here rather than leaving elsewhere.
Thanks, Jan. Maybe just a quick reminder before we go into this, the polls are still open, so I've seen that quite a people participated, but whoever hasn't, please have a look. And then I would like to quickly present the outcome of those to Jan and Marcus. So if you haven't had, then please participate. So I give you another minute. And then we can let you comment, and then, open up the floor to questions. So if you have any questions, then please raise your hand. And then I will just either read your question or put you on the floor. So let's give you another 30 seconds. We already have I think 60-ish%. So 3, 2, 1. Thank you all. So the first question we actually ask our audience, what are the main benefits of crypto assets in cross-border payments? And we gave them the option of multiple answers. And the winner was remittances, followed by micropayments and access to finance. Not so many people think that greener payments is the optimal solution via crypto assets. Machine-to-machine transactions also very popular, nearly 40 or above 40%. Is this something that's surprising to you, Marcus, or is this exactly what you expected working in this business?
Yeah, it was remarkably in line with what I was hoping would happen. So, we work with customers worldwide, and the most common use case right now is remittance, followed by e-marketplaces and SME flows. And what's happening is that the larger companies and more traditional flows are well supported with the tech that's in place today. But it's people on the peripheral which aren't served well with today's systems, which are most in need of help and most in need of new models. And that is really where remittance is very, very important. So we're able to make a massive impact to the lives of people who were really poorly served by the banking system using old models. So I can see how that is top of the list. It's really good to hear. The also machine to machine, I think that's a really big one. I mean, there are 50 billion devices today connected to the internet, and they are starting to trade and interact. We talk about KYC. There'll be terms like KYT, know your thing, before too long. And I think that machine inclusion in the payment world is going to be a very, very important definer of how payments are going to evolve in future. It's good to have that on the list as well.
Thanks, Marcus. The second question was specifically for the Commission. So we ask our audience, does MiCAR ensure technology neutrality across the board? And there were the options of yes, no, and partially. The majority thinks, and that's quite a strong majority, 63, it's partially. Barely anybody thinks it's not the case. So it's like around 10%, and 25% think it totally ensures tech neutrality. Do you think that's surprising to you, Jan, or is this something that you expected, that there's some question marks?
Well, I hope that that's what we aimed at indeed, to have a kind of a technical and innovation-friendly, let's say, framework. It is actually, if you think about it, a bit more of a complicated, let's say, topic and story, because I mean, our proposals are also, let's say, targeted at the digital assets, at crypto assets, and at DLT. And you can, of course, argue that this is in itself, let's say, not tech neutral, basically. So I think, let's say, we have to also further develop this concept of technology neutrality. I mean, what we know, yes, our legislation is technology neutral towards the technologies which we know. But I mean, the new technologies will completely change the financial system. And in that sense, I mean, we also need to take into account the specifics of these technologies. And if a specific technology kind of adjusts the risk profile of finance, for example, if a specific technology like DLT allows to settle a security within seconds or immediately rather than within a day, well, the risk profile is different of that specific technology, and in that sense, you also have to probably specifically cater for that. In that sense, I think, let's say, our general objective is to achieve this technology neutrality in a broader sense. That basically, let's say, we in the end we allow people to use both existing and new technologies, but we will sometimes have to legislate specifically for specific aspects to achieve this tech neutrality, I would say. And I'm very happy that this is that people think that we've overall gotten the right, let's say, direction here.
Thanks, Jan. The third question is, do you think the implementation deadline for MiCAR, so, and we potentially by 2020, potentially by 2023, when everything is in there, is timely enough? So basically a similar question that we ask you both. And it's a quite balanced response. So the biggest one with a very close margin is no. The deadline for implementation is too late, followed by yes. If you're an asset reference token issuer, it's fine. And then basically with the same result is yes, totally, and no if you're a crypto asset issuer or service provider. So it's a very balanced response. I think that basically also reflects what you discussed before. And then the fourth question, and I think that's something that Jan will be happy about this. We ask, how satisfied are you overall with the MiCAR? 15% said very satisfied, and the rest said covers the basics and needs fine-tuning, which I think is basically what you wanted to achieve, to provide a solid foundation and obviously leave some pieces up to debate. Nobody thinks it's not a good piece. So there's complete agreement that you got the fundament right here. And the last question, I don't know if you want to comment on that, if that's surprising to you, because that's what you expected anyway, but I think having a
no, I mean, it was our hope that we can provide something which is solid and which can work and which can enable innovation in this sector further. And I think it is also clear from our side we have made a proposal which is based on quite a lot of outreach and a lot of consultations. We've also discussed several times with the member states on this before. But of course, let's say we do not claim that we got everything fully right. And indeed, what we put together is a proposal. Now it is the European Parliament and the Council of Ministers, the member states, who will need to let's say decide on this proposal. And I think that gives also still further space for further reflection on one or the other issue, because we take very much the point that especially as a business, as long as you don't see a legal text, basically, it's very hard actually to really fully think this through and what does it exactly mean. So I think we are, I mean, overall, I think with this in mind, we are quite comforted with the kind of feedback we get. But I mean, it's important for us also to understand from everybody in the markets, like how does this now really, what's the consequences, and if we see that fine-tuning needs to be done here and there, I think will be more than open to that, and I think the Parliament and the Council will ensure that this is happening.
Thank you. And the last question is, we ask about one of the elephants in the room these days, the digital euro. Within what time frame do you see the need for a digital euro? And we ask immediately, in the next 1 to 2 years, in the next 3+ years, or never. And the overwhelming response was, it's nearly 70% said in the next 1 to 2 years. Barely anybody said immediately, so it's like 4%. And then around 25% said in the next 3+ years. So is this something that encourages you or worries you, looking at what the ECB is doing? Is this something, or is this what you're operating on anyway under this pretext?
I think from our side, I think we strongly support actually the ECB work on this, I mean, however, it is also clear, I mean, a CBDC is not a small project, so it needs to be done properly, and you need to properly consider all the impact and the technical design and everything else. So it will, I mean, you need a bit of time to do this. And I think, importantly, I think the ECB has also made clear that they are looking at various options, and I think they're not looking at something where the central bank would basically take over this whole space, basically. So, I mean, they have made very clear that there will remain a role for the private sector. So I think it's also important, again, here as on MiCA, basically, I mean, there is space for innovation in Europe right now. A lot of private initiatives are happening, which are very, very positive, very good. So people should actually, I mean, the fact that the digital euro will not be there tomorrow should encourage people actually to continue on this kind of this innovative, also on this private projects. And in that sense, then I think if and when a digital euro comes, basically it will be an important supplement, but it will not be the only show in town, I would say.
Thanks, Jan. I would like to open the floor now to the audience, and we have some questions already. So the first one is from Petra Yanes. So maybe you could be so nice and briefly introduce yourself once I onboarded you, and then ask your question. Please be short. You're on the stage now.
Yes, hi. Do you hear me?
Yes.
Yes, I come from Slovenia, from Ministry of Finance. So maybe this is question more reliable for financial administration of Republic of Slovenia. So my question is, because it is related to Ripple protocol, maybe I'm focusing on one case. So this company, because it is using Ripple protocol, this company said that he's not providing financial service, but he's just offer like peer-to-peer service. So why is a problem? Because if in Slovenia someone is providing financial service, this company have to pay the special tax on financial service. So maybe I like to please for explanation of Marcus, how he see this.
Can you maybe formulate the question more specifically, or do you want to answer? Because Marcus, sorry if I interrupt this.
Well, I can take a stab. Maybe if I've misunderstood, do please let me know. So Ripple's technology uses DLT, we use blockchain, and we also use a digital asset called XRP. It's important to think about Ripple as a network with many levels. So many of our customers use Ripple purely as a connector between sender and receiver. And in that one-to-one model, you haven't got a classic blockchain with 20, 30 nodes all agreeing. There are two parties in the transaction. There could be a third as required. But it's a very closed relationship, and that enables value to move very quickly between ledgers. Now, today these ledgers are very traditional. They are accounts within banks that link into a central bank money. In future, if they are a CBDC or stablecoin ledgers, then Ripple just becomes even more high speed and effective with that connection. So many of our connections are peer-to-peer. Additionally, we are working with XRP on a more traditional blockchain to deliver liquidity between today fiat money on traditional ledgers. And that liquidity delivery, again, is well positioned to be a bridge currency for CBDCs. Think about it as two levels, if you like. One is peer-to-peer, and the other is your classic blockchain for delivering value through the asset which we use XRP for. Did that answer your question, or have I kind of misunderstood where you're focusing?
Okay, thank you.
Okay, good.
Thank you, Petra. I have two questions in the chat that I would like to ask the publishers to raise their hands so I can onboard them to ask them, because I only see anonymous, unfortunately. So if anybody wants to ask those questions directly to the panel, then please be so kind and let me know. Otherwise, it's a bit difficult, and I can otherwise happy to read it out as well if nobody volunteers or identifies himself. Let's give it a sec. Okay, if nobody, then I will just read it. There's one first. Let's go with Prabanj Daniel, or Daniel Prabanj. I will just onboard you, and again, please state from where you are and ask your question. Oops.
Hi, my name's Prabanj. I'm from Canada. I'm a 22-year-old undergraduate student. I just had a question about ODL and its implementation. It seems globally right now, central banks are at a real crunch for liquidity, and ODL seems like a pretty perfect solution to get rid of the requirements of things like pre-funded capital and limited banking hours and things like that. So I'm just wondering, how much more push do you think is needed to see implementation? And do you think we're at the threshold of the current system, I guess, in terms of what it can handle?
Great question. So, I mean, the good news is we are live already with ODL. So ODL stands for on-demand liquidity, and that's really what you get if you use the XRP bridge currency. So you're starting from dollars and you're trading through to, let's say, Philippine pesos, 24/7 in a few seconds end to end. That really delivers the value into, let's say, the Philippines without requiring money to be held overnight. And that model is great for payment companies, great for people, and also great for regulators, because it means your banks in your country are holding more capital in your home currency and aren't having to expose themselves to overseas deposits. So it's a really good model. We're up and running between the US and Mexico, between the UK and Philippines, US and Philippines. So what we're doing is proving that model and proving the value. And what we expect will happen is, as overseers get to recognize the value that this is creating, we'll see more markets opening up to this method of financing a cross-border flow. So, great question. It goes by the point that we are an engineering company, so we get our hands dirty, we do things, we get things working. We always work with regulators to build out these models, and yeah, we are demonstrating it works.
Really appreciate it. Thank you.
Thank you.
Thank you. So I have another question from an anonymous attendee, unfortunately. Otherwise, I would allow the person to ask it him or herself. The question is, in regions where government-issued IDs are not so common, how can the EU help payments providers facilitate micropayments to these individuals? It's probably a question to you, Jan, but I think Marcus can comment as well. You're on mute, unfortunately.
Sorry. Yes, I mean, I think in principle, let's say access to financial products does not hinge upon, let's say, government-sponsored electronic identification systems. Of course, they can be of great help, and I think, let's say, what we're seeing in a number of member states based on the European EIDAS framework, that public-private solutions have been put in place. I think it's a good, great development. But let's say in principle, I mean, the private sector, the banking sector, and other operators, tech operators, can also, let's say, themselves develop actually solutions, which identification solutions which are in compliant with the rules and which are therefore fit for purpose. So I think from our side, what we're trying to do is basically to make sure that the rules for this are clear and harmonized, so that private operators can actually develop these solutions both domestically and across borders. And then I think, I mean, I'm sure that Marcus will come in on that as well. I think, of course, DLT-based technologies can also help there in one or the other way. I think what is important from our perspective, and that's, I think, probably in line with the global thinking on money laundering prevention, that indeed, I mean, payment transactions do need some element of identification. So that's something where we need to find solutions indeed, which make this easy and possible and feasible. And I think that is all possible actually on the blockchain. Voilà, to enable this. But I think Marcus may have additional comments on that as well.
Yes, certainly. And again, because we are out there doing this now in many countries around the world, we've had to solve this problem for flows into, let's say, Bangladesh, into Philippines, where with a traditional cash economy, there was a real problem of identifying the end person. So we developed techniques like Pay ID, which is, if you like, an internet, let's say, an email address for money, which kind of helps to link in the end receiver with an identification that is viable, and then delivers that flow through to that end receiver. We've also worked out ways we can use Ripple technology to check the end receiver and then reset the payment once that receiver's identification is confirmed. So if you have a pickup, let's say, for money in the Philippines, and the person's name is a double-barrel surname, the name on the payment message is a single surname, in today's world, that payment would fail and there'll be a big expense. With the Ripple model, we're able to pause, redefine, check with the end payout provider, and then continue that payment through. We also use a thing called multi-hop, which is a great idea in that the internet, I mean, this conversation today is bouncing off computers all over the world to get to our screens. We don't even see it. It's a multiple forwarding model of the internet. We've done the same thing for moving funds between counterparties. And again, that's important because it links the end wallets where you have the recipient with their ID through the bank, through the cross-border bank. And then if that's linked into a payment ID, it enables much greater awareness of the end person you're paying to, even though you're moving very, very small amounts of money around the world. And to Jan's point, there's a lot more that can be done to build on that model, to build really strong upfront checking of identification, checking of bank accounts before the transaction flows. And that's how we plugged into ISO 20022, which we built into the blockchain as well. That's a real, I think, like synergy between the regulatory world and the innovation world, and I think it'll have a big impact.
Thank you. I think we're a bit over time already, so for the sake of your time, I would like to ask one last question to maybe give you an outlook from your perspective. So, you know, the mandate of the Commission runs till 2024. What is your expectation from a business perspective, Marcus, on what will happen till then? What's your timeline that yourself and the company and you think the ecosystem is operating on? And for you, Jan, looking at all the proposals out there and all the innovation in parallel going on, what do you see as the biggest or the most important developments apart from the digital finance package to influence the flourishment of you know, the ecosystem we're talking today about? So maybe Marcus, you start, and then I leave the last word.
Yeah, certainly. Certainly, I think the important thing is to move now with proving these models into Europe. So what we will do is continue to work with payment companies and banks, either in the Eurozone or connected to the Eurozone, to show and demonstrate that cross-border delivery of payments using blockchain is highly impactful and very, very important to, you know, people and organizations associated with Europe, both in terms of on-demand liquidity, the XRP element, and also in terms of interconnecting between sender and receiver, for example, linked into identity. So we'll do that work. I think having the framework come to life gives us a really strong model within which to innovate. And what we hope will happen is, as the legislation tends to take much firmer shape, it is developed and fine-tuned, working with organizations like Ripple, which are kind of like proving what's working and not working. And that way, I think we'll get a very strong model for the future that, you know, kind of leaves the past behind and doesn't unconsciously bring the past with it into the world that we want to be operating in.
Yeah, no, and I think that's a very interesting perspective ahead. And I think from my side, what is the most important developments and trends on this digital finance outside our package? Actually, I hope a lot, and I think a lot, because I think for me the most important thing is all the interesting and exciting projects which we actually seeing across the EU in actually many countries, many member states, some bigger, others smaller, but there's a lot of actually positive energy and productive, let's say, and innovation happening. That's for me the most positive and the most important thing in the end. What's happening on the ground, what also is reflected by then the authorities, the supervisors. Also, I think the finance supervisors, they are important in finance to allow things happen. And I think also there we see big shifts for much more openness towards innovation happening. So I think that's for me in the end the most important thing, what's happening on the ground in all 27 member states, and there we've really seen a lot of encouraging developments.
On this positive note, then, I want to thank you both for taking the time today. I hope it was an interesting discussion for the audience as well. I found it very interesting, and we're looking forward to work with the Commission as always, productively, proactively, hopefully, and hopefully also helpful to you guys.
And hopefully also a bit critical every now and then. Otherwise,
yeah, you know, always happy to do that.
Very good.
And so thank you all. We will have one more webinar later this year. Invitations will go out. You can also follow us on Twitter or LinkedIn. If you haven't done that already, then you can get informed about the next one. It will be probably circulating around security tokens. And then everybody's obviously welcome to join again. Thank you for taking the time.